When most people think of investing, they think of a cold machine driven entirely by two forces, risk and return. But what if your portfolio could do more? What if financial growth didn't have to compromise your ethical or spiritual values? Conventional finance often rewards pure speculation over tangible economic value. Welcome to the world of Islamic finance, a multi-trillion-dollar global financial system that bridges the gap between modern wealth creation and deep moral accountability. The foundational philosophy of Islamic finance is rooted in an ethical, faith-based system. It emphasizes social justice, the equitable distribution of wealth, and a strict requirement that all transactions must be linked to real economic activity rather than pure speculation. At its absolute core, Sharia finance operates on a simple but radical premise. Money cannot be treated as a commodity to make more money. In the conventional world, you can trade complex derivatives, bet on market collapses, and generate wealth from pure thin air. In Sharia finance, every single transaction must be explicitly linked to real economic activity. In this system, if an enterprise succeeds, you share the profit. If it fails, you share the risk. It creates an authentic partnership between capital providers and the entrepreneurs actually building value. Contrast this directly with predatory lending models, where the conventional lender always wins, extracting interest regardless of the borrower's actual real-world outcome. To keep finance anchored strictly to real-world ethics, the Sharia framework enforces three hard boundaries. Let's look at each one. The first pillar is the absolute prohibition of riba, or interest. Money is a medium of exchange and a measure of value, not a commodity that can generate profit, simply by being lent out. Second is the elimination of gharar, which refers to deceptive uncertainty in contracts. This lesson defines how to distinguish between legitimate commercial risk, which is welcome, and prohibited speculation. And third is the absolute exclusion of maisir, which refers to pure games of chance or gambling. It prevents the financial system from turning into an elite casino. This isn't a theoretical concept from ancient history. Today, this framework powers automated stock screeners, global real estate joint ventures, and institutional asset management. It allows modern tech professionals, business owners, and everyday investors to build robust wealth, completely free from exploitation. With trillions of dollars in global assets, Sharia finance is one of the fastest-growing sectors in modern asset management, proving that ethical parameters do not limit financial success. You don't have to change your core financial goals to invest ethically. Sharia finance provides a transparent blueprint for anyone seeking an asset-backed approach to global markets. In our next lesson, we are breaking down the biggest pillar of all, riba and why money for money lending is banned. Subscribe to follow along as we build the complete guide to ethical investing.